$10,000. Who the hell has $10,000? I don't know, but someone does. Anyway, this video today I wanted to make based on user feedback on one of my Facebook groups, suggesting if someone had $10,000 and they invested it in, a couple of the blue chip dividend stocks, what exactly would it look like? What it would look like now, on a quarterly basis, annual basis, etc. So I decided to take that idea and basically turn it into what it would look like now and into the future, and compare, about 5 blue chip companies. So hope you enjoy this video. So the companies I decided to focus on today are Apple, Johnson & Johnson, Coca-Cola, 3M, and Procter & Gamble. Obviously, they need no introduction, but real quick, Apple is in the technology sector and the consumer electronics industry. Johnson & Johnson, obviously in the healthcare sector, drug manufacturers major. Coca-Cola, consumer defensive, beverages and soft drinks, obviously. 3M is in the industrial sector. The industry is diversified industrials. And Procter & Gamble is the consumer defensive sector. Industry is household and personal products. So obviously they've all been around, for quite some time, and I'd say most dividend investors have at least one of these in their portfolio, or more. So anyway, so $10,000. If someone, let's just start off. If you have $10,000 and you're new to investing, I would not recommend investing all of that right away. You need to slowly invest it as you learn. If the idea is to learn yourself and invest what you want and not pay someone to do it, then take your time. Obviously, you worked hard for that money, so why don't you learn before you start throwing away the money? But this video, again, I figured I'd have some fun. Let's see what $10,000 looks like in each of these stocks, and we'll compare it and go from there. So as you can see, I put all the companies on the board. I put their ticker symbols, as I'm sure everyone knows them as well. So before we get into what $10,000 can get you today, I did a comparison of what these stocks look like, what they look like in 2014, and what they look like as of last year, 2018. So in 2014, Apple stock was $110.38. Their dividend payout annually was $1.85, and their dividend yield was 1.67%. Obviously, that yield was not good. And their yield now is 1.79%, not too great. Their stock price has gone up to $157.74, and their dividend annually is $2.82. So not too bad. Johnson & Johnson, in 2014, they cost $104.57, paid an annual dividend of $2.76, and had a starting yield of 2.64%. As of last year, or end of last year, their stock cost $129.05. Their annual dividend payout was $3.54, and their starting yield was 2.74%. Not great, not as bad as Apple, but Coca-Cola. 2014, their stock cost $42.22. Their annual dividend payout was $1.22, and their starting yield was 2.89%. As of last year, their stock was $47.35, paid an annual dividend of $1.56, and yielded 3.29%. That's a pretty good starting yield for a company like Coca-Cola. Now 3M in 2014, they cost about $164.32 a share, and their annual dividend payout was $3.42, starting yield 2.08. As of last year, $190.54 per share, paid out $5.44 a year, 2.86% yield. Last but not least, Procter and Gamble. Their shares cost $91.09 in 2014. Their dividend payout, $2.53 a year, yield 2.78%. 2018, this was kind of surprising. As of the end of 2018, their shares were 91.92%. I mean, $91.92. That's a pretty weak gain in 4 years. Their dividend payout was $2.84 a share, and their yield was 3.09%. Sorry I had to go through all that, but I needed to mention that because to compare what $10,000 looks like, 10 years, 20 years, 30 years down the road, we have to use historical data to compare. But before we even get into the future, let's just look at now. $10,000 will buy you 63.4 shares of Apple. Doesn't seem like a lot. And yes, you can buy fractional shares with most brokerages. $10K for Apple will pay out $178.78 a year, and that's $44.69 per quarter. $10,000 for Johnson & Johnson, you'll get 77.49 shares. Dividend payout per year, $274.31, and per quarter that comes out to be $68.58. Coca-Cola, cheapest of the bunch, 10,000 will get you $211.19. Some people may like that better for whatever reason. Shouldn't matter, but having more shares sometimes gives you a better feeling. 10K will pay you, again, starting yield, $329.46 a share. That's the best of the gang because their starting yield is the best in this group. That comes to $82.37 a quarter. So when you're looking at something like this and you're someone that's older or retired, you want income now. So you're looking at the higher starting yields along with obviously the safe stocks. And again, I consider all of these stocks safe. 3M, 10K will get you 52.48 shares. It will pay you $285.50 a year, and quarterly that comes to $71.38. 10K, Procter and Gamble will get you 108.79 shares. Will pay a dividend of $309.09 and $77.27 a quarter. Sorry for the hiccups. My fat ass just ate Wendy's. I don't know why, but the diet starts Friday. Anyway, so that's what 10K will get you today. So that was the main question or suggestion on Facebook, but I wanted to dive in a little deeper and go back to the original comparison that I was showing you, 2014 to 2018. So based on this 4-year change, I use this and I basically averaged it out what it comes to annually. And sorry, let me put my dog on the couch. There she is. All right. And I multiplied that, going down the road. Like, what it will look like in 10 years, 20 years, 30 years. So, anyway, Apple, when I did the comparison, the stock price change average for 1 year was 10.73%, which was the highest. The highest dividend increase based on year was 3M at 14.77%. Apple is right behind them at 13.2%. So just keep that in mind as I go through this, because as you can tell, $10,000 from day one, Coca-Cola pays out the most. But as far as how much time, if you have, say, 30 years, 20 years, you're going to want to see this chart. So let's get into it. Let me move my crappy chair over. So there's two sections here. This is what your dividends will look like. Again, based on historical, the last 4 years. So I'm basing it on the stock price increasing it and the dividends increasing, the same throughout those 4 years on average. I'm not saying this is what it would be. I'm just saying I'm using historical data, and again, only 4 years of data to show you what it could look like if things keep up. So again, there's two sides: dividends without drip, dividends with drip. If you don't know what drip is, it's a dividend reinvestment plan, meaning you take your dividends, you reinvest them into more stocks. Mainly the same stock. So the idea here is the same stock. So here's the case where you do not reinvest your dividends. So Apple, as we said here, 10K, the annual dividends are $178.78. Based on the 1 year dividend increase of 13.2%, which is pretty high. But you never know with Apple. They're pretty successful. I have a feeling their dividend will go up significantly. 10 years from now, that'll be $617.51. Another 10 years, $2,132. And then 30 years from now, $7,367. So again, time is everything. Johnson & Johnson, 10K today, they'll pay you $274 in dividends. 10 years from now, it'll almost double to $542. 20 years from now, $1,074. And 30 years from now, $2,126. Coca-Cola, again, today, $329 it'll pay. 10 years, $646. 20 years, $1,267. 30 years, $2,484. Not bad at all so far. 3M, today, pay you $285 for your 10K. You leave it in there. It'll pay you $1,131 in 10 years. 20 years, $4,486. 30 years, $17,783. But again, this is based on the average of the last 4 years. And the average of the last 4 years came to 14.77% per year increase in dividends. Is that going to happen every year for 30 years? Doubt it, but it could. You never know. Highly doubtful. But if it did, you would be sitting pretty with your $17,000 a year in dividends, having only invested 10K. Last but not least, Procter & Gamble. Today you'll get $309 in dividends. 10 years, $417. 20 years, $563. 30 years, $761. Not great, because Procter & Gamble, although yes, they always increase their dividend, their average was 3.05%. I mean, per year, that sucks. Although, if you're at your job and you get a 3% raise nowadays, you're pretty happy. So maybe that'll make some people happy. A lot of people like Procter & Gamble. I like Procter & Gamble. So I guess 3% is better than nothing. All right, now let's look at what this would look like if we actually reinvested the dividends, rather than here where we're playing with our dividends. We're spending it, we're going crazy, we're going out drinking. But here, we're not doing that. We're taking all of our dividends and we're reinvesting it back into the stock. So if we look at Apple, in 10 years, $742. In 20 years, $3,102. And then 30 years, $13,031. Awesome. Go Apple. Johnson & Johnson, again with the drip. 10 years, $701. 20 years, $1,740. 30 years, $4,224. Coca-Cola, $909 to $25.33 to $7,000. Oh yeah. And 3M, 10 years, 1,700. 20 years, 12,924. Holy crap. 30 years. Oh my God, $116,539. Can you imagine putting $10,000 in and turning it into that? Dividend income. Not to mention whatever the hell the capital is. Again, it's probably not realistic because their 4-year average is high at 14.77%. But you never know. The power of drip in action. Now for a letdown. Procter & Gamble, $568, $1,036, and $18.78. Yeah, weak sauce. I mean, but, you know, Procter & Gamble's average 3.05. I'm imagining the average for the next 30 years is going to be a little higher than that.